1. Welcome everybody to the 63rd episode of the #InvestThis podcast. I'm your host, Scott Bauer, and today we've got a special guest with us today, Robert Heyder with Core Properties out of St. Louis. Robert, how are you?
I'm good. Thanks for having me here.
Yeah, man, excited to have a chat for a little bit. Why don't you give the listeners a little bit more about your background and, kind of what you're focused on now?
Yeah, absolutely. I kind of come from a real estate background. I was in commercial real estate finance for a long time, and then started Core Properties in, I guess, technically 2009, and then, went full-time in 2013 and been rocking since. We do a good amount of residential purchasing on the investment side. We own a fair amount of single-family and multifamily rentals, and then also lately we've been getting much deeper into the commercial space. So we own about 110,000 square feet of commercial space, mostly office and retail. Well, actually mostly office right now. We've got a couple retail deals that we're digging into, one under contract. But so for the most part, that's about it. We own a brokerage. We used to own a property management company, sold it off about 2 years ago, mostly on the single family and smaller multifamily side. We sold that off, but we kept all of the commercial property management.
So, I mean, that's really a lot. For the listeners out there, we have listeners on this podcast that are just beginning, and we have seasoned investors that are buying large multifamily and commercial space. So in that amount of time, you said you really went full-time in 2009. Here we're in 2019. So let's call it about a decade that you've taken to build up to this. Where did you – I know you said you started in finance. So let's go all the way back to that. Where did you start with that, and how did you make that transition?
Sure. I can go back even further than that maybe. When I was in college, I didn't know what the hell I wanted to do. Pretty good at numbers and whatnot. So went kind of the finance route with a business school, and then found out they had this kind of real estate program that was you could kind of tack on. So I was like, oh, yeah, let's do that. So I took 3 real estate classes, absolutely loved them. They were, by far the best classes that I've ever taken, and actually the most functional. Most of the other stuff you don't really use. So these were solid. So took those, I was like, okay, I like this. And then, but I still didn't know what I wanted to do in real estate. I was pretty entrepreneurial even back then. So from that point, I said, hey, there's this commercial real estate finance job in Chicago. You get corporate housing. You can live there for a year. You train under some studs. So the head of Northwestern University's financial accounting program trained it for 3 months. It was like classroom training, which sucked to have classroom training, but this guy was, it's like getting your MBA fast, So took that. I ended up getting that job because I didn't know what I wanted to do in real estate, and this was kind of real estate related. I figured I could meet with a lot of developers and investors and kind of see, which angle I wanted to go and where I wanted to go from there, and kind of like get an open book because you can see who's doing well and who's not because you're looking at giving them loans and whatnot. So dug through that. I was in Chicago for about a year. Amazing gig, corporate housing. So that was pretty legit. And then headed back to St. Louis. I was with a big national bank called LaSalle Bank. Back in the day, pre-recession, LaSalle Bank was the U.S. arm of the 7th largest bank in the world.
Did you say LaSalle Bank?
Yeah. LaSalle.
And they had they have a commercial division too, right? LaSalle?
Yeah, absolutely. That was it. Yeah.
Yeah.
So they're based out of they got bought by Bank of America during the recession, but prior to that, it was the LaSalle Bank Chicago Marathon for like 20 years. If you remember, it's always on TV and whatnot. It was like kind of one of the more prestigious marathons. But yes, they had a huge commercial real estate division. They had retail banking and stuff as well, but I was on the commercial side. So, average deal size was probably 10, 15 million or so. So we did some pretty big deals, upwards of 100 million. But so yeah, kind of went that route. And then during the recession, we got bought by Bank of America, and I went to go work for a smaller local bank. And this was 08, 09-ish. So I went to go work for them. Our average deal size was about 4 or 5 million. But at that point, when I really got to kind of see deals that were attainable, they kind of made sense. You could see $1 million or $2 million deal. Yeah, we were financing home builders and single family, multifamily investors. So things kind of started making sense from that regard. And then also I got to kind of see how banks operate. So that was a huge jump off point for me, because I was like, okay, well, I can go out and talk to local banks and really kind of speak their language, see if they've got any assets they want to sell, kind of talk to them and see what their inventory looks like. And so that was kind of the jump off point. So in 2009, I bought my first rehab to sell. Bought it, rehabbed it, ran into every issue in the book, sold it finally, and then bought another one in that neighborhood randomly, ran into a bunch of other issues. My contractor didn't pull the permits to finish the basement. And, we had it under contract, and then the inspectors came through and said, you need to tear out all the finish you put down there and tear up the concrete and then, redo it. So lost the buyer and a whole new slew of issues, and battled through all of that. And then, started buying rentals in about 2011 and kind of worked from there. And then finally by 2013, I had enough going on the personal, kind of entrepreneurial front that I couldn't do that and banking any longer. So I quit in 2013.
So it went from, you started Core Properties in 2009. Are you licensed?
I no longer, I'm on a referral basis. I'm on a referral basis. I don't practice anymore.
No, I think it's funny because I get asked the same question. It's like, well, no, kind of, kind of am. But not really at the same time. So,
right.
I think so anyways, going back, I mean, you made the transition really not in 2009. You started Core Properties in 2009, but it wasn't until 4 years later until you really felt in a position where you could break off away from banking full, 100% and burn the boats there, or what?
Yeah, for the most part. I was trying to do I didn't quite know exactly how I wanted, I didn't know what I saw the future really looking like. I just knew that I needed to be doing something entrepreneurial, but I kind of thought that if I could do both for as long as possible, I'd be better off. I was pretty successful in banking and did pretty well and was paid pretty good. And there's a lot of other benefits and stuff. But, so I was kind of like, man, if I can stick with this, buy up rentals, kind of keep on my rental portfolio, do a couple of rehabs on the side, I feel like I could grow faster financially that way. In hindsight, I probably should have made that jump a lot sooner, really kind of scaled up faster.
Right.
But yeah, so I was kind of holding out as long as I possibly could without dropping the ball on either side. And finally, it just got to be too much.
And so when you made the transition, then was it just you that started just by yourself, or did you have a partner? Did you start off? Because at that point you were licensed, right?
Yes. Yeah. So I was a licensed agent at that time. I did not have a partner out of the gate on that stuff. I had a couple of guys that I worked with pretty closely that gave some cash, to invest in deals, and helped us be able to get financing because they had pretty successful full-time jobs. But beyond that, I did not have an active, partner on the day-to-day basis. I didn't partner with my current partner, John Rankin, until mid 2015.
Okay.
Yeah.
Okay. And that was after he had gone through and all you listeners out there, Robert and I are both in a mastermind together. So we've spent some time together recently. We're in the Dominican Republic a couple of months ago, which was a good time. And so we've had a chance to get to know each other a little bit on that front. But Jonathan Rankin is his business partner now. And, they're just crushing it out there in St. Louis. So anyways, going into the transition, and you really, when did you feel like you really started to get some traction, really some, start to make some serious impact and start to crush it? Because, there's a time when you're not crushing it, trying to figure it out, and then you kind of get over the hurdle and it's like, okay, now I'm doing well.
That's a great question. I'm not sure I've ever felt that way. I still don't. I feel like every time I feel like I'm getting somewhere and like I hit a goal, but before I hit it, I'm moving the goal line. So I truly don't feel like I'm ever there.
Yeah. Yeah.
Which is good and bad, right? It'd be nice to finally hit it sometimes, but I just don't know if I ever will. And I'm kind of starting to get comfortable with that.
So I agree with that 100%, and I feel the same way. However, with that being said, one of the things I think as entrepreneurs like us don't do is celebrate the wins and victories, right? So what I've
100%.
done recently is when I wake up in the morning, like the first idea that goes in my head is, you know what? I'm just going to crush it today. And whatever that means, right? As long as I put my best effort out there and I continue to move the needle, then I'm crushing it that day. And that's the reality of it. And so I I get what you're saying, but there's also, you got to be grateful for what you got. And it sounds like you've gone a long way. So I want to go back to how you really scaled it up. So, when did the brokerage come in? Was it the investing space first? And are you flipping? Are you wholesaling? What is that gradual progression?
Yeah. So, well, I guess out of the gate, primarily rehabbing, right? Rehabbing and selling. I started rehabbing and selling before I even really knew what wholesaling was, which
Okay.
was pretty interesting, right? Um, then started kind of getting into the rental side because I really wanted to have more rental property. So really was working hard to get to that front. And then I kind of found out what wholesaling was. It really was, I had such good access to deals through local banks that I just didn't really even need to market or anything. So I didn't dig into it or really understand that too terribly much. Then, and then back then I didn't have kids, so I had a lot more time. So in the mornings I'd go to the gym and work out before work. And I stumbled across Sean Terry's podcast and learned like what wholesaling was. That's how I figured it out, which is crazy as hell. So I stumbled across this podcast. I was like, oh, wow, this is a huge crutch. Like this can absolutely keep inventory coming. It can bridge gaps with wholesales. You don't really ever make any money on the rental side until you really scale up, So it's like you feel good because you got equity. And you feel good because you got a little bit of cash flow coming in. But, when you have just a few properties, one HVAC issue or something can blow a whole year's worth of cash flow, So like you
100%.
can't really bank on that. So stumbling across Sean Terry's podcast and understanding what wholesaling was a big bridge kind of getting out there. So that was a big gap, kind of trying to learn all of that, trying to get that scaled up. Back, I guess, in 2013, still was doing a lot of rehabbing, some wholesaling, 14, kind of the same. And then in 15, I really started doing more wholesaling. Probably late 14, early 15, I started doing a lot more wholesaling. I was still trying to do rehab, still trying to grow the rental portfolio. At this time, when I was building the rental portfolio, I was still really big on equity capture and kind of value add. So a lot of the rentals needed a lot of work. So I was still rehabbing the rentals, making rent ready, which, just takes time. And as you're trying to do and an agent, so trying to do all these different pieces just got to be too much. And as anyone that wholesales and rehabs, they probably know there's that critical point where the rehabs start falling off or your marketing starts falling off on their health. It's just so difficult to juggle all of those in kind of one group. So that's kind of when Jonathan and I started talking a lot more about possibly partnering up and seeing if we could kind of make 1 + 1 = 3 or 4. And we kind of baby stepped into it for a while. About a year, we kind of started a separate entity, started buying and rehabbing, buying and wholesaling out of that entity. He was managing most of the rehabbing and rehab to rental side. I was primarily dealing with the wholesale side, the marketing, acquisitions, all of that, kind of building out the back office, stuff that, we were kind of bootstrapping it there for a long time. No CRM, just kind of whiteboarding everything. So kind of breaking out from there. But, and then after that, we started, 2016, I think we started the property management company because it got to be too much on the property management side. And that's why we needed the brokerage. Started the brokerage then, kind of scaled that up and then really just started buying and buying and buying. And then in 2016, we did our first big commercial purchase, 25,000 square foot office building, which was just a home run deal for us. Got that through a local bank contact and kind of ran with it and stabilized it pretty quickly. And that was kind of the real big jump start to the commercial world because that really kind of proved the model and got us just out of the gates there on that.
Would you say that you're more focused? I know that you guys have a wholesale operation. You have a residential wholesale and flip possibly still operation going on, but is your main focus moving into the larger commercial space?
Yeah, personally, my focus is that right now. So Jonathan really runs a majority of our residential side. So we've got a full-time broker outside of Jonathan and I that runs the brokerage on a day-to-day basis, and then runs all the agents and all that stuff. Jonathan then runs our wholesale and rehab division. We did about 100 deals last year, and we're on track to maybe do about 140, 150 this year, which is pretty exciting. And then all that other stuff. We used to do a lot more rehabs. Nowadays we do a lot less rehabs. Just profit margins a little bit slimmer, and we're kind of getting stretched on what we can physically do. He's running all that, and then giving me the focus to be able to go out and really kind of dig into the commercial side a lot more. So we've bought quite a bit of space in the last 120 days. About 3 different office deals in the last short while here. So
are you flipping these, or are you holding on to these for a little bit of time and then stabilizing them and then selling later? What is the play there for the listeners out there that don't have any idea what you're talking about?
Yeah. I mean, everything that we're buying on the commercial side right now is for personal rental, passive income. We haven't really got into that side too terribly much. I think we will in the near future. But just kind of looking for really good assets that we're looking to buy, mostly from banks, or kind of some of the population that's kind of aging out and they want to sell the assets before they go to senior living or something along those lines.
And you're leveraging the relationships that you had with the banks from before to find these opportunities, or are you raising capital from your the first guys that you were raising capital from, or others as well? I'm just trying to put the pieces together for the listeners so they can really understand how you're achieving these, right? So that they're able to go do it themselves, potentially.
Yeah, absolutely. So I'm leveraging some of the relationships I have with banks. You don't necessarily have to have past relationships. You can talk to banks, and the bank takes a deal back, or a deal that's starting to go bad, like a commercial short sale or something along those lines. Those are great routes. And then there are just good deals out there that can be had outside of just kind of what let me back up there. There are great deals out there to be had in the same channels that we're buying regular wholesale residential deals, 70+ list, back tax list, like the same issues that are going on the residential side, just albeit there's a lot more houses, but those same pieces still apply to the commercial side.
Yeah.
So, we're out there talking to folks in that regard, primarily folks that are kind of downside, or kind of, I would call them the downsizer group, but obviously not downsizing out of commercial. It's just as they're changing their asset mix, as they're getting older and kind of preparing for the future, if they don't have kids that want to manage their commercial assets, well, they got to go and sell them. And a lot of them have been kind of bootstrapped for a long time, mom and pop investors, that price point, maybe from, $1 million to 5 million range, kind of outside the institutional equity, outside the big investment groups we're looking at, smaller office complexes, smaller retail centers, smaller industrial complexes, things like that. So we've been kind of digging into that quite a bit. And then in the same avenue, it's that same group that we're looking at for banks, because banks can easily go and sell the institutional stuff when they take it back. But the other assets it's kind of a hole in the market a bit. So we've been kind of dipping into that range for a little bit now.
How does somebody go and find a bank to build a relationship like this with? Because you can't just call up, go to bankofthewest.com and call them up. I don't think, or can you?
You can. You're probably not going to get a call back, but I would start, I would, the cool thing about banks are all the data is public, right? Any bank that's FDIC insured, all of their information has to be publicly shared. So it's not like, some are on, Yahoo Finance because they're publicly traded, but even the ones that aren't publicly traded still have to provide all their data online, like on the FDIC website. So you can go and dig through that. You can actually track banks of certain asset sizes. Well, so I'd look specifically for banks that are like 250 million through about 3 to 5 billion in asset size. So those are kind of your smaller to medium-sized local banks for the most part. They probably have local decision makers, and they make decisions relatively quickly. and you can build a relationship with them. So once you figure out what that bank mix is, you can see from these reports online if they have, financial issues, or if they have the need to sell, REO, bank-owned property, or anything along those lines. So you can start trying to figure out how you can figure out the banks that make the most sense from that realm, and then start trying to figure out how you can bridge those relationships.
And you just go
from that point, what's up?
You just go to the FDIC website for that?
Yeah.
Okay.
So they report a lot of, all the bank data, or they have the links there. Most of it's federal, but I kind of dig through local bank stuff. But so from that point, dig into it, dig through that data, find those banks that meet that asset size, like I talked about. And then once you have your list of 8, 10, 12, 20 banks, well, now you can start digging into LinkedIn or something along those lines and seeing who that they might know, and start just trying to bridge those connections, try and find those asset managers or bank presidents or whoever you can kind of talk to and just get in the loop. It's not as fast as direct marketing by any means, but you're starting to just kind of build these relationships. You just want to be in the mix when something comes up. It's kind of the key there, right? So it's a little bit slower pool, but just kind of works out pretty well.
So you're really focused on the commercial side yourself now. You're letting, I guess, your wholesale operation is still going on. What would you say the biggest obstacle that you kind of run into up to this point is? If you could say one.
Biggest obstacle, I would still say allocating time accordingly. I've only really been focusing directly on commercial. I'd say probably since about the beginning of this year, maybe December of last year. But even still, it's hard because, any of these, even though we're doing a lot of business, we got a lot of stuff going on, we're still a small business, right? So you still have issues and fires that come up that you got to jump on, whether it be on the residential side, whether it be on the brokerage side. None of that really matters. You still got to jump on them. And it's just now, in addition to that, you've got one big piece of your operation that you still have to focus on and put out all the other fires. And then you have fires that still come up in this big piece. We've got a 55,000 square foot office deal that we bought in about a month and a half ago. And I mean, within the first week and a half, as all the snow's been melting and as everyone's been talking about all this flooding, man, the water table just rose and it just flooded the entire lower level of this building. It's got sump pumps on all the corners and kind of in the middle, and two of the sump pumps burned out, and 75 or 80,000 gallons of water came into this building.
Oh, wow.
It was an unbelievable amount of water. And, we just had to jump on it and get it figured out really, really quickly. And, that's obviously in addition to all of the other issues and stuff going on. So, we had fires on the brokerage side and fires on the wholesale side, just inherently happens. And then now you've got this new thing. So just kind of allocating the time accordingly and making sure that you're still pushing forward on that goal, much bigger goal, and not letting the balls drop on the other side.
Yeah, always moving the needle, man. I totally get that. What would you say, how big is your operation? For the listeners out there, it's you, it's Jonathan at the top.
Yeah.
From there, what does the tree look like from there?
Yeah, so, it's always fluctuating. I think we got 11 members on the team now. So we've got an office manager, lead coordinator, kind of a marketing assistant. We've got 3 in-house cold callers. We've got a contract to close person. 2 folks on the acquisition side, 2 acquisition specialists. We let our disposition specialist go not too long ago, and we're looking to hire someone new on that front. And then we got Jeff here, who's helping with the maintenance, and he's going to be handling some other stuff for us. And then, he's got a video background, so hopefully he's going to help me with some of this podcast stuff. But in addition to that, I know I'm leaving some folks out.
Still small business, man.
What's that?
You're still a small business. You got to know all your employees. Come on.
Yeah. But we're shifting a lot of stuff around. Well, and then we've got, I think, 12 agents, and we're not like a normal brokerage. Everything's really tight knit on our side. So it's a little bit. What's that?
Lean and mean.
Lean and mean. Yeah. Well, and we just want we're still big on culture. We're still big on, kind of having that cultural mix that we really like, that makes sure everyone kind of is fighting the same battle, And so a lot of our agents, we work very, very closely with them. We do a lot of lead sharing. We're big on finding a route for almost every lead. Hey, if that lead comes in and doesn't work on the as is purchase, it sounds like a good agent lead. Let's make sure we kind of build that in and try and, squeeze all the juice out of that lemon. I miss Shelby. So Shelby, this is really exciting. So Shelby and I grew up together and really close, good friend for a long time. We went to high school and college together. But she's kind of running our senior living division. So we just partnered with one of the largest senior living facilities in town to handle all of their asset disposition for the folks that are coming in. So, they moved 120 folks in last year, and they're going to do about 150 folks this year. So we're now their direct partner and sole disposition partner to help either buy the assets as is or list the properties. And then as part of that, we built out a team to manage all of the moves, all the estate sales, all the junk hauling, all of the steps associated with that. Built out a separate CRM so that we can have a database to communicate and have that timeline built out so that the senior living facility knows what's going on. All of the vendors know what's going on. We know what's going on, and kind of have full transparency. So when the family calls in to say, hey, what's going on with grandma's house, they've got it all right in front of them, which they never had in the past. So we built out a pretty good program with that. We went live with it January 1. So we're, I guess, going into the 4th month, just finished the 3rd month, and it's been pretty awesome.
That's good.
I can't believe I forgot that, because that's been one of the big things that I've been working on in addition to the commercial side.
Well, it certainly sounds like you got a lot going on, which is exciting and obviously very cool to see, business growing and, you get your hand in a lot of different pieces. I want to ask you one more question. I think it's important for the listeners out there and just for everybody before we go on to the lightning round. Are you ready for this final question?
Let's do it.
All right. So the final question is, what do you think is going on in the market right now? We got to talk about that because I think there's a lot of people that are uncertain. There's all sorts of talk in different asset classes about the state of the market. So I want to get your thoughts.
Yeah. So I think there's 2 or 3 things going on. One, margin compression is the biggest one that we're feeling, and everyone I'm talking to is it's the hot button, right? I wake up almost every night thinking about it. So it's just, we're getting squeezed. There's more competition coming into the market. There's more avenues for folks to sell homes. I was just listening to Ed Milet's podcast this morning with Billie Jean, and they were talking about, what I'm talking about?
Yeah, I just listened to that last week.
Oh man, it's an unbelievable episode. But Billie Jean said it, and I've heard it a handful of times before, but it's like how, the amount of money that you're really going to make and your real worth is going to be directly related to the amount of problems you solve and the size of those problems, right? Well, if you think back, like a handful of years ago, providing someone a cash as is offer was a big solution. You were solving a big problem. Nowadays, there's so many folks solving that problem, it's not that big of a problem anymore. There's a ton of routes. The barriers to entry have become so low. It's so easy to market. Access to funds are so easy. There's so many hard money lenders. So it's not that big of a problem anymore. So as a result, the value of that, the worth of that is much less. That's kind of what I took away from that. I was like, holy shit, that's huge. Well, that has a lot to say about margin compression. It's, it's just inherently there. There's more people solving the same problem. The problem's not as big. You just, we're getting a less of a value out of that, less of a payday. So we're feeling it from that end. As a result, marketing costs are higher. So we're getting a lower cost or lower profit just on that single deal between the price we buy it for and the price we sell it for. And then at that same point, it costs more to get that deal, right? So you're kind of hitting both from both ends. I was talking to someone just earlier today. It's kind of like, you think like the printing industry, right? The printing industry's got crushed, got hit on all ends, right?
Yeah.
So not to that degree, but it's kind of getting just squeezed from both sides. So that's one piece that we're feeling right now outside of kind of what's going on state of the market. State of the market is the other variable associated with that, the other big item. I think we're at kind of a peak. I don't think there's a whole lot of room to go up. The question is just how long do we run?
How long can we stay flat?
But yeah, before it dips a little bit. I don't think the dip's going to be that big, but I think we're racing towards that. If I had to bet, I'd say it's probably first quarter 2020. Probably about this time next year. You know, going into an election not too long from now, so it might kick off a little bit further. Who knows? But something along those lines. I don't know where the correction is going to come from. We just had the yield curve invert that everyone's talking about, and I guess what it's like.
CBRE just put out
after a yield curve inverts that you typically see a correction. I think on average, I think it's 320 days or something. So about this time next year or so, March. So we'll see. I think we're preparing for it. Honestly, I think the solution to both of those, I don't have all the solutions, but the solution to both of those to some degree is, kind of what else can you do? Kind of bolt-ons. How do you make the most on every lead? How do you, what other avenues, what other value can you add? How do you decommoditize the sale process? One of the things we've been trying to solve. How do you make it not about the dollar amount only? And kind of digging into that. And then what lead sources will you have going into a shift? What kind of referral network do you have? What do you have outside of direct marketing? Things like that. But off on a tangent there a little bit. Did that answer the question pretty well?
Yeah. I mean, it's just getting an idea of what your thoughts are. I mean, I would agree with you 100%. I just spent the last weekend in Houston with Eddie Speed learning about some other creative ways to go about it. And I think I totally agree. Everybody's kind of taking the same approach. There's so many wholesale. I mean, I'm in Phoenix. We're flooded here.
Yeah.
Wholesalers, right? So everybody's bringing the same card trick to the table. And it's no longer a benefit to play that card trick. So I'm learning about how many other ways I can creatively put a deal together to where I can bring a lot more card tricks to the table. And I know that I'm going to win by doing so. So, for all the listeners out there, I would recommend doing that as well to separate yourself from everybody else out there. That's a really big piece. But anyways, I appreciate you sharing your thoughts on that. With sake of time, we're getting down. Are you ready for a lightning round?
Let's do it.
All right, man. So what would be your hashtag invest this tip to keep our listeners moving forward, if you could give them one?
I would say, so for the listeners that aren't doing much, it would be, figure out the way that you can take action the fastest, right? How lame is that? But no, seriously, it's, I would say hit the streets, really, really pick a couple pockets, preferably up and coming pockets, and just hit the street. Be the guy that everybody knows in that area and just hammer the streets. Make sure everybody knows you.
Be visible.
Yeah, be visible. For the folks that are doing a fair amount that are listening already, I would say work on solving that issue we just talked about. How do you decommoditize yourself? Like, how do you do more? How do you squeeze more juice out of the lemon? How do you add more value than the next guy? And then build your network.
Yep, that's huge, man. What about what's been your favorite book that's had a massive impact on you? What's that impact been?
Good to Great. If you guys have heard of Good to Great. The audio book is unbelievable. Yeah. Jim Collins, he's a great storyteller, so it makes it fantastic to read or listen to. It's been unbelievable. Kind of the whole bolt-on concept. How do you do something really, really well and then figure out ways to bolt on to it without kind of depleting what he calls the flywheel. That's the engine that just goes, that helps fund everything. How do you bolt more things onto it with the same amount of kind of back office, the same amount of support, and really just goes back to that same concept, squeezing the most lemon out of most juice out of the lemon.
Yeah. No, that's huge. Great book, by the way. I love that book. What about, we're in some mastermind groups, and I'm sure that you've been coached, mentored by somebody. Who's giving you the best advice, and what's that advice been?
I'll tell you what. So we're in Billionaire boardroom together, boardroom elite. It's been huge. I think some of the best advice recently that I've received has been from Kent and Sean there in that group. I work really, really closely with those guys. Really appreciate them. Sean's really, really big on kind of strategically taking action and just keep pushing forward. That's been huge. We're getting ready to roll out our podcast on kind of scaling from residential investing to commercial investing, and kind of how that niche works and how do you understand it and whatnot. And Sean's been, well, they've both been a huge proponent on that, but specifically Sean's been very big on that as you know, he's done so well with his podcast. It's just so much success with it. So that's been a big item. He's been a big one for me. And then, you know, Kent is just huge on that stuff, you know, in relation to, you know, kind of like just being grateful for what you have and kind of giving you a really, really good basis. And then just pushing you to take action now and as fast as possible. So I literally think about it every day. You know, some of the advice that they've given.
Yeah, that's huge. Thanks for sharing that. How do you like to give back?
How do I like to give back? You know, honestly, I really, really enjoy kind of helping folks and teaching folks and kind of like, you know, specifically people that already kind of have that drive. They just need that kind of that first step. So we'll have a lot of folks to the office, kind of show them how to get started, kind of develop a plan. You know, if they want to quit their job, they want to do X, Y, and Z, and kind of really coach them into that. You know, we still do it quite a bit. I still kind of really kind of help folks kind of bridge that gap and run with the ball there. Do quite a bit of that. Do some charity, you know, giving back, things of that nature. But I'd say for the most part, just kind of helping folks help themselves.
That's huge, man. I mean, you know, to get a push from somebody that's been there and done that, somebody that's aspiring to be that person is huge, you know, so that's a massive way to give back. And that's a good segue into our last question, which is, how can the listeners reach you? Where can they find you at? If they want to come into your office, or if they want to call you, if they want to get in touch somehow, where do they find you?
Yeah, absolutely. So Facebook, Robert Heyder on Facebook in St. Louis. On Instagram, Robert_Heyder. You know, our website's Core Properties, STL.com. So properties is plural, and then STL.com. So back-to-back S's there. You know, you can go to the contact us page on the website and kind of get us from there. You can direct message me on Facebook or Instagram. Happy to kind of dig into anything along those lines. And, you know, we got a lot of folks that just kind of funnel in through that. So
awesome. Well, we'll make sure to add that in the show notes so anybody listening can find you. And I appreciate you sharing the story, man. I mean, it's always inspiring to hear other people's journey. I know the listeners out there really, really appreciate it because it gives them some vision on where they could possibly go and what it takes to get there. So with that being said, man, thanks for being here, Robert. We'll talk to you real soon.
Absolutely. Thanks for having me. Appreciate it, Scott. Have a good one.